Hi, I'm Alex. Today we have Earl Valencia. He's a fintech entrepreneur, startup advisor, speaker, and author. Welcome.
Hey, Alex, glad to be here. I'm totally psyched to be, in the SAI podcast. I've been following this since the beginning, and I'm super impressed on just the level of engagement the community has.
Thanks. Yeah, I think a lot of people are more interested in finance during this time, especially since a lot of people are in a tough situation. They're learning more about financial education to better themselves.
Hmm.
Yeah. Can you tell me a little bit about your background?
Yeah, of course, of course. So, I guess I grew up in LA. Well, no, I was born in LA, and then I grew up in Manila, in the Philippines, most of my life. And third year college, I moved back to the US with the dream of becoming an astronaut. So I took up electrical and aerospace engineering, BU in Cornell. Went to a company called Raytheon become an aerospace engineer, so work with drones, satellites, rockets, and then ended up going to Stanford for business school. So that kind of happened somewhat by accident. I got in via GRE exemption during the time, so I didn't take the GMAT. And as one of the first admits of Stanford not to take the GMAT, I guess in its history, that's what the admission head told me. And yeah, and then that kind of led me to a path with the intersections of business, technology, and a little bit of finance, right? So I worked first with the incubator of Cisco, where our goal was to find the next billion-dollar businesses for the company. So, future Internet of Things, video, so all these types of new concepts. And our thought there is that what would the world look like if in the world of unlimited internet, right? So I guess collaboration that we're doing now. A lot of it came from Cisco technology. In fact, I think the former the current CEO of Zoom came from Cisco WebEx. So it's a kind of a precursor to a lot of collaboration technologies. After a couple years, I guess in Silicon Valley and Cisco, I decided to move back to the Philippines and work for the largest telecom company there. It's a portfolio company of a large private equity firm. And we really took a look at, how do we invest in startups, both in the US and also in emerging Asia, to see what makes sense, let's say, in the infrastructure side. So it could be digital, mobile, I guess healthcare, transportation, agriculture. So these types of interesting investments. Did that for about 4 years, and then got a call, unexpectedly actually, by a hedge fund here in Connecticut, where I live, called Bridgewater. It's one of the world's largest hedge fund, and they take a very algorithmic approach in order for them to invest. So I head a data program and partnerships for the corporate data team of Bridgewater for a little bit, and then most recently, I was in San Francisco as managing director of digital transformation at Charles Schwab, which is a large investment brokerage house. That I think a lot of people, especially the subtle Asian investors, probably use at some form or another.
Yeah, Charles Schwab is known for as being a pretty good broker.
I mean, I really like it. I think they have, this notion of like what's best for the customer and look through the customer's eyes. And I really believe that the financial service firms should always look at their principles and see if they're doing the right thing for the customer, right? And then, so I left Charles Schwab late last year, and now I'm a fintech entrepreneur, mirroring kind of the technology background I had, and hopefully using the financial knowledge I've gained over the past couple of years in order to help emerging markets build out their financial infrastructure, particularly their alternative credit score. So there's a lot of markets in the world where maybe there's no FICO or Expedia or Experian, sorry, and we want to build that from scratch, and also build out maybe the first credit experience of emerging markets, right? So where credit card penetration is very low. So we're trying to build, a whole new financial infrastructure in other parts of the world, and pretty excited about that.
Can you tell me a little bit more about your startup?
Yeah. So I think that's it, right? So think about it that there's a lot of countries in the world, right? Especially in emerging markets where they're young, a young population, massive population, maybe at the 50 to 100 million or more. Um, but then, the financial infrastructure, either is, it's mature but then very conservative, or maybe they just don't want to give out, credit or loans to a lot of people because of, their biases, right? So what happens is that younger generations, the next time they maybe apply or get a credit card or line of credit, maybe would be when they're 30s or their 40s, just because they don't have that much paperwork for them to submit, right? So we want to enter in emerging markets and partner with large retailers, right? So think about it, where, at least in these markets, trusted brands that are, selling convenience stores, groceries, etc. They have large loyalty programs, and we developed an algorithm to translate these loyalty programs and build a credit score out of that. So it then becomes a de facto second credit, I guess, a credit score for individual, especially younger population, and then we can extend credit to them, right? Just think about it like a virtual credit card, where they pay back their loan within 30 days, and we can increase their credit limit after that. So that's kind of what we're approaching. And yeah, currently right now we're in the TechStars financial inclusion program, partnered with Western Union, and pretty excited to build out that company, starting with the Philippines, but then we're not going to end there. We're probably going to scale up to many more markets after this year.
What are some of the challenges you faced when starting Plentina?
It came from Plenty, so the origin of the the name actually is, there's a song, I guess, in the table of plenty, and we just said, okay, what and I guess I grew up in the Philippines, and na is a term that kind of as an end of a sentence that, there's no real translation, I guess, into English, but it's like it's pretty cool. So we said, like, how do we build that? And it's, Plentina is I guess, a nice soft touch into financial services, because we want to be, again, customer focused and kind of be like your trusted friend, right? So the challenge is really building, to be honest, and we're talking to the, subtle Asian investors here, right? There's a lot of friction, both the personal and professional side, right? So the personal side is, especially now you're established. I mean, right before this, I was managing director of one of the largest financial institutions in the United States, right? And just to talk to my family, my friends, right, to say that now I'm jumping to become an entrepreneur, it's kind of very logical to a lot of people, right? So right? So I think that's the big hurdle. The next hurdle obviously is to, make sure your house is in order first. So, I've been kind of dreaming of building, at least trying to start a company someday. So definitely, saved up money, invested my money into, stocks, etc., in order for me to have enough runway in order to experiment, right, and give, let's say, this 1 year, right? So yeah, I think that's really the goal here, is to also have, before you jump the gun, have your financials in check, just because you don't want to take risk and then your family will be out in the streets, right? I have two young kids, a wife and two young kids, and that's very important for me. And then I think the professional one, right, is just like starting a business. It always takes much more time than what you think, and also how to fundraise with investors that believe in your vision, right? So I think that's another, area to think about, is how do you then find people to bet on you and bet in your idea, even if literally it's maybe a concept, maybe some app that's not yet a business, right? So
How did you raise the initial capital for Plentina?
we weren't sure, right? So when we started this concept, we thought we had a really cool idea. We got a lot of potential traction from partners, but when we tried to do our first fundraising, we said that we'll raise millions of dollars on literally a PowerPoint, right? Because we see things in Silicon Valley, you know, and all
Yeah.
these movies, right? Like, oh yeah, just talk to some people and they give you some money. So we did our kind of roadshow late last year, literally on a PowerPoint deck, and everybody said, like, you know what, you're a fintech business. Number one, where's your licenses? Right, your government licenses. Number two, where's your product? We like you as a team. You guys are a superstar team, but where is it? And we're like, oh no, no, it's gonna happen. It's gonna happen, right? Like kind of, like when in the movies, right? Long story short, we did that in November last year, and we realized very quickly that nobody wrote us a check, right? We're like, oh, okay, interesting. I guess, that doesn't happen in reality. So we kind of go back to drawing board and see, why don't we just execute the product? And in between, we got our first angel check from a CEO of a large company in the Philippines, right? And yeah, I mean that the first angel check, and then after that, a couple of months, talk to more investors, built out our algorithm. Um, you know, one of my classmates, ironically, it's so interesting. So one of my classmates from undergrad called me and said, "Hey, I saw you updated your LinkedIn page, and you're starting a company." I was like, "Oh yeah, yeah, yeah." He's like, "Hey, by the way, years ago, 8 years ago, I invested in this small company that had a different name, but now it's called ClassPass, right?" And as you probably know, ClassPass is one of these unicorn companies. And he said like that was my first angel investment, and would love to support you since I knew you since you were in college. Okay, cool. So he led our family and friends round. So that was interesting. And then we got into Techstars, which is a startup accelerator, and yeah, we got further money from angels and other institutions in order to close our funding round before Techstars. And we're again, like any startup entrepreneur, we're continuously fundraising. So we'll probably look at another round next time. But yeah, I mean, I think that's just the historical of where we are. But it's been a wild ride, right? I think in the end of the day, you know, um, you never know with these types of conversations, but the people who believe in you will pull through.
So why did you create Plentina?
Yeah, I mean, it's a combination of kind of the need, but also somewhat of personal experience, right? So maybe at least in the big picture, right? So my life mission is to give opportunity when there's no opportunity present, right? So my grandfather, way back, right? I guess in the 1930s or so, came from a province in the Philippines and ended up getting a scholarship, right, to go to like the public engineering school, which is a top engineering school in the Philippines, right? And but he tried to make ends meet. So he worked kind of part-time jobs, and one of the part-time jobs was kind of being a janitor and stuff, right? So long story short, he used his engineering degree to build a civil engineering company, and that rose to be a multinational company in his lifetime. And yeah, I mean, I guess if you wanna call it, it could be like close to unicorn status during the 1960s or so, right? And he ended up using the last 30 years, 20 years of his life in order to do public service. So he was the cabinet secretary for public works of the Philippines, right? And unfortunately, he died when I was born. So he died in 1983, and I was born 1982. But I think just the notion that education, hard work, being an entrepreneur, and giving access to opportunities could change someone's life. At least it changed my life, even if I haven't met him. I think that's what my life mission is, right? But unfortunately, in most of the world, even the United States, right? Like even people who deserve it, they don't get these big breaks. So I said like, how do I make an impact before I die? And I said that before I turn 40, I want to be sure that I do something at the scale of billions of people's impact versus just, a small number, right? So that's kind of one thing, which is like, when will I do this, right? Will I do this when I'm 60 or 70, right? I think that's too late. Um, and another thing is that there's really, I think, financial service in general. I think, that's what I learned in something like a Charles Schwab, right? I think most financial service companies should be extremely customer focused, right? But I think most of the world, it's the customer is not number one anymore, right? And they discriminate based on your assets, not necessarily on your potential, right? So I think that was something that I want to disrupt, where a lot of young population all over the world get discriminated by banks just because they don't earn enough, right? But for most bankers, that's what they think. Like, how much do you earn today? Um, but I think the notion should be how much will you earn in your lifetime, right? And that's not the conversation, unfortunately, of financial services in most of the world, right? So I think that's the key. That's why we're building, both a alternative credit score and a microcredit company to hopefully become the first credit experience of the younger population all over the world.
Yeah, I agree.
You're basically investing in their futures and the potential earnings that they can.
Yeah, right. So think about FICO, right? Like, I mean, it's total chicken in the egg, right? So, I mean, if you don't have enough money, how can you get a credit card? If you don't have a credit card, how can you build your credit, right? Like, so both, people coming from outside the US, coming to the US, start with like a low FICO score, young professionals come in with like a low FICO score, right? Like, who said that that was the right thing to do? Right? I don't know. I mean, do you know? Like, I don't know whoever can tell me, like, is that the right model? No, but nobody ever questioned that that was the model, right? So I think this is the time, especially with technology and data, to revisit that, right? Why can't you look at like good behavior? Let's say, paying your rent or, even just, being a good borrower or purchaser of things. Like, why can't you give credit to that? Taking care of your health, for example, right? Like, isn't that a good indication of good, you know, of good credit worthiness? But
That's true.
but then antiquated, I think, models are there, unfortunately, right? And that's I think time to rethink that, and I think that's the at least type of questions we ask ourselves right now.
Yeah, that's really interesting. Using health and other variables to determine your credit score.
If you don't have history, already a negative, so you just have to always prove yourself, and that's just harder, right? So yeah, so it's an interesting concept that we hope that we can make a dent in the universe. Right?
I think you guys are onto some great things, especially with your background. You have like a long track history working at Charles Schwab's and Bridgewater, and you're very creative and innovative.
Yeah, man. I think let's see. I mean, for the folks who are, yeah, I think entrepreneurs are entrepreneurs to be. I think the big thing is to look at your background and does it fit? And then the last one is, are you working on a problem that really makes sense to you, right? Um, that you either felt the pain directly or you really want to just make an impact in that because it's going to be rough, man. Like starting a company and telling people like this is my concept. A lot of people say like there's already FICO. What the hell are you talking about? Right?
Yeah.
All right. But you and I get it, right? Like, but most of the world, like they question why change, right? But I think that's why entrepreneurs are amazing. And again, I'm a first-time entrepreneur. Before I was an investor, right? And I have a lot of more respect now, for entrepreneurs because it is kind of half crazy, right? Like you want to build something to change the current status, and it's not normal to think that way. I think, right? Or at least to act on it, right? Most people talk about it, by the way, but very few people act on it, right? So I think that's why you kind of have to be like half crazy, half idealistic, right, in order to build something like that.
That's true. If you want to change the world, you have to go against what the majority says. You have a lot of experience mentoring and advising startups. Can you share about that?
Yeah, yeah, of course, right? So even I guess when I was in Stanford, and after that, I mean when I was in Cisco, I was building kind of internal startups, right? But always kind of had this interesting conversations with entrepreneurs, right? And then I got kind of formally into this, although I guess I was also in VC when I was in Stanford. But when I went back to Southeast Asia, where we had both an office in San Francisco and in Manila. Um, that's when I started to invest in multiple entrepreneurs, right? So I built basically a startup incubator, but also a fund in order to fund kind of companies. So by the time I left there, it was like 38 companies, I think. So yeah, so I mean, I think the biggest thing really here is, I guess asking these questions and asking people like why you want to build this and is this a problem really important to you, and then also connecting them to, I guess what I call is networks and capital in order for their dreams to come true, right? And I think that's really what I guess a mentor advisor of startups are, is that you just figure out and channel the energy of some of these amazing entrepreneurs building some very impressive things, and then just unblock them if you can, right? And you have to do it really without any other intention, right? Because I've advised many companies, not just the 38, but then even now I'm advising like a whole number of other companies in emerging markets and other places. But I think they just need other people to validate that what they're doing is right, because being an entrepreneur is a lonely road, right? Like again, most people don't believe in you. Sometimes your family doesn't believe in you. There's ups and downs. A big customer, pulls out their money. So, just being there and kind of listening. And another thing actually was that we found out is that um, the biggest source actually of entrepreneurs, or at least startups not making it, is co-founder relationships, right? And alignment. So that's also something that I always kind of look into is, you know, are both the founders, or I guess if there are three of them or four of them, are all of the founders aligned to where this end goal should be, and put that out on the table. And then the next one really is, what does success mean to all of you? And you have to have that kind of interesting conversation very early on, right? Especially like part-time entrepreneurs, right? Like, and you're working with someone else. If you're a solopreneur, that's fine because no one will. But I've seen so many teams break apart because one person's doing, let's say, 80 hours a week, another person's doing 20 hours a week, and then infighting happens, and then at some point, like the breakup happens, which is not cool, right? So yeah, that's another thing that I take a look at least in this. But yeah, totally enjoy talking to entrepreneurs and helping them build, especially at the early stages from 0 to 1.
So, like, I know that you have a fund in Philippines. It's called QBO. Is that correct?
Yeah, so QBO is actually not a fund, but it's a public-private partnership with the Philippine government, JP Morgan, and in the incubator I built called Idea Space, in order to fuel startup companies by mentoring, education, and connection to capital, right? So yeah, I mean, I think right now it's like 300 companies, I think, is under QBO's program, or more, maybe even more now, right? And then we're also helping build out the incubator network in the Philippines. So yeah, I mean, I think think about it as like a super connector organization where, how do we build basically an entire ecosystem to help budding startups that have the Philippines as a market, right? So you could be coming from other places too, and you link up, let's say, with QBO in order for it to, help you accelerate your business inside the country. But it's, partnered with, the largest ministries in the Philippines for that as well. So yeah, I think that's kind of where it is. And yeah, I mean, I'm also advisor to a number of other venture funds that relate to Southeast Asia as well. So very interesting times. And then I also built out. Actually, we're launching in a few weeks. For people who are listening, I guess now it's September. We're also doing a cross-border accelerator of looking at like startups from Southeast Asia, particularly Vietnam, Indonesia, and the Philippines, and then connect them with networks, mentors, advisors, investors from Silicon Valley. So that's like a, kind of a incubator accelerator program that is connecting emerging markets with Silicon Valley. And that one's called Cognity Labs. And yeah, I think the applications are closing in the end of September, early October. So
Yeah, so if you're an entrepreneur in Southeast Asia and you would like to apply, they can apply on Cognitive Labs website.
yep, yeah, cognitylabs.com. And very exciting just because, again, Vietnam, Indonesia, Philippines, I think there's a lot of entrepreneurs there. But if there's other markets, let us know. In fact, that's how we expanded to other countries, because a lot of entrepreneurs from those countries asked us to, you know uh, give a program there.
Yeah, there is a lot of potential, especially in Southeast Asia.
Yeah, yeah. I mean, think about it, right? Southeast Asia is what, 650 million people, right? And some of the fastest growing economies in the world. I know COVID probably hit a bit of a snag, but I think just the macroeconomics is amazing, right? Like most of these countries, the population age is like 30 and below, right? So, in the end of the day, right, like you bet on macro trends, um, and let's see where the population goes, right? But I think that's why it's an exciting region in the world, and they're very digitally plugged. So think about it, where in most parts of the world you have to educate people on how to use the smartphone and social media and stuff, but in most parts of Asia they just love it, right? So they consume it very quickly.
It makes the learning process a lot easier for them to adapt.
For sure, right?
There's a lot of cool startup companies coming out of Southeast Asia, like C Limited in terms of e-commerce.
Yeah, yeah, of course. I just foresee
Yeah.
gaming and shopping, right? And I guess now they're going to payment, so that's good. I mean, obviously there's this, transportation decacorns like Gojek and Grab, right? Indonesia has a number of unicorns, as well. Tokopedia, Bukalapak, like these marketplaces and e-commerce sites inside of these, large markets as well. So yeah, I mean, I think that's a contrarian way to think about where is the alpha, right? Like where is the opportunity for investors or people to bet their careers on, and there's certain emerging regions to think about, right? And I think Southeast Asia is probably one of these premier regions that someone should consider to either do an alpha for their career or alpha on their money.
In terms of credit, where do you see the future of credit heading towards?
Yeah, it's interesting, and I always reflect on this, on you know um is the behavior now, which is like to pull out plastic. Is that the model of the future, right? I think payments will always be there, but then is credit, is that the case? I think it stems first on like the question of who deserves credit and doesn't deserve credit, right? And can technology answer that question right now, right? And unfortunately, I think, again, as I mentioned in the beginning, there's just some models that we don't know if it really works for a broader set of the population, right? And how do you then assess trust? So for me, that's really the bigger question, right? Like, can we quantify trust in the world, right? And hopefully there's new models and studies that we can do in order to answer that broader question. Just because if you then do trust, then you can do credit, can do more financial services, right? So I think that will be interesting. I think obviously having a purely cashless and digital transactions that maybe don't involve swipe but other things will be interesting kind of form factor that will happen as well. Um, yeah, and I think, but I'm telling you, so I was just when I was doing kind of my research, I went to the mission in San Francisco, right? And I said, oh, why don't I see what the current status of credit, in I guess what I call is emerging pockets of the United States, right? And when you go to some of these places, you see pawn shops, right? You see payday loans, right? And that's fine. They serve a good part of the ecosystem for emergency purposes. But I came into one of these shops and said, hey, I want to take a loan for $1,000. Um, you know, um, how much can I get? I mean, obviously they said like, oh, can you bring in something like a TV or a cell phone or something here in order for us to have some collateral? I was like, oh, I don't know, right? And in the end, I was like, how much is your interest rate, right? It's like, oh, 15%. Yeah, don't worry. It's 15, 20%, really depends, right? I was like, oh, 15, 20% per year. That's pretty good. That's pretty good. And they laughed at me. And it said it's 15% per, I think it's per month or per week, but I think it's per month, right? But maybe it's per week, but I think it's for sure it's at least per month.
That's
So I
crazy.
was like, this is interesting that this is the United States in San Francisco in a legitimate, operation, that this is current state, right? And there was a line in this shop to get money. So I think that there is pockets, right? Even the United States, that these types of, credit is not as accessible to most people, right? So I think that's why I think there is maybe a better way that needs to evolve in the future. But yeah, this is for me, was a big eye opener for me, because I expected this, let's say, in in other emerging markets, but not the United States.
Some of the businesses that are doing really well are cash for gold businesses right now.
Yeah, see, I mean, it's interesting, right? Yeah, I mean, I think that's they're thriving. I think it's, I don't want to say it's bad businesses, right? But I'm saying is that, you know, um, is there a better way to, get people credit without necessarily, looking for their grandmother's heirloom, right? And,
Yeah.
putting it in cash for gold, right? And do you know really how much is that? Like, is it pegged to, the gold, the the gold price that's set up in Wall Street, right? Like maybe not, right? So, so I think, yeah. So I think broadly, financial services, needs a revamp. And I'm lucky because, I got exposed to, I guess, what I call is like the OGs of fintech, right? So both Bridgewater and Charles Schwab were created, I guess, 30, 40 years ago. And they had this theory that technology would disrupt Wall Street, both of them, right? So obviously, Bridgewater went to the hedge fund side and built out an algorithmic hedge fund. And then Charles Schwab said, can you use computers in order to have a fixed fee trading, right? Or very low cost trading when Wall Street was asking for percentages of trade, right? So I think right now, I think, most probably the, subtle Asian investor listeners are like, oh yeah, your trade should be free. But 30, 40 years ago, imagine that like large brokerage firms in Wall Street, every time you want to buy, let's say, a Tesla stock, right, would charge you full percentage points in order to just buy or sell, right?
Yeah.
And that's the current state before. So think about it, where Charles Schwab, who's came from the Bay Area, Stanford alum, said we can use computers to make things, more simple and standard, and maybe a fixed fee. And out here in the East Coast, Ray Dalio said, how could you use computers in order to take out the emotion from traders and literally build an algorithm based on heuristics.
It's pretty amazing.
Yeah, yeah. I mean, and and again, it wasn't really intentional, but also both of them are still led by their founders, right? So that's why I call it still as like kind of, I guess, mega fintechs, right? Because they're also, started within, I guess, their lifetimes, right? So it's just nice to see, like, how a founder-led company is very different from a non-founder-led company as well. You know,
So in terms of a culture, what kind of culture are you trying to create?
I think that's the beauty about building your own company, right? Is that you can dictate some of these things. But yeah, I mean, for us, it's always about the mission, right? And our mission, we have this vision that we want financial services to unlock someone's potential, right? So, some of the core areas that we tell people is that, we're a technology first company that is impacting financial services. We believe that, we should help people grow themselves, right? Through, either it's credit, financial services, opportunities, right? And I think the next one really is, how do we always say the truth in everything, right? And tell it like it is just because it's important for us to always be honest with ourselves and with each other, right? So, and I think these are things that you're like, yeah, that totally makes sense, right? But it's living it kind of on a daily basis that you know, right? So, for example, we just had kind of an internship class over the summer, and they asked us, hey, you know what, we're still, let's say, in you know third year, fourth year college, but we don't know what to do with our careers. So what we did inside of the firm was, we invited, different guest speakers every week in order for them to get exposed on what career paths they should go. So we got someone from like a top advertising agency, some people from like McKinsey and BCG, right? Some venture capitalists from there, right? So, and we don't have to do that, right? Like, yeah, you're an intern in a fintech startup, you should be doing something else. But we believe that we should give people exposure to unlock their potential, right? So that's what we do and put practice, from our words.
Yeah, I feel like the world is a big place out there. There's a lot of things people don't know or haven't seen, and once they get exposed to it, ideas start emerging.
Yeah, yeah, right. So I think that's really it, and I think this is the fundamental, way of investing, right? It's like there's information asymmetry, right? Like you have more information, you can act on information, right? So, for example, when I was in undergrad, right, like I didn't know what venture capital was, right? I didn't know what startups were, to be honest, right? I mean, I hear it, but I don't know it, right? It's only when I went to Stanford, it's like I was like, wow, this is actually real, right? Like some people came to the school, built a company, and then sold it, and then they now invest in companies. I was like, oh, okay, I didn't know that's like an actual thing to do, but I didn't have that exposure, right? And but then I compare myself when I was in Stanford to some of my friends who grew up in Palo Alto, right? They went to Stanford, or obviously some of them went to Harvard or whatnot, right? And they knew about startups since they were like 16 or 15 or
Yeah.
something, right? So they had like a 10-year head start than me on information, right? I had a classmate in Stanford who started investing in stocks at 11 when he was an expat in Hong Kong. His dad was an expat in Hong Kong, right? So I was like, wow, I mean, I think that's you hit it, right? I mean, a lot of these things is all about exposure, and I think that's really the advantage of a lot of people, unfortunately, right? Is that they just have that extra amount of exposure compared to the population, and that's why they get a lot of these opportunities that you and I might not have at that particular age, right?
That's true. That's one of the reasons why I created South Asian Investors. It's because a lot of people don't know how finance works. Or I was a late bloomer in terms of like learning to educate myself in finance. I would like people to learn earlier on and gain that knowledge and use it to better their futures.
Yeah, right. And again, it's funny because this knowledge is out there, right? I mean, it's public information. It's like gibberish, right? Like think about it where, if you're in your kindergarten and someone shows you like a calculus problem, you're like, I have no clue what this is, right?
Mhm.
But, after years of maybe studying, algebra or calculus, you're like, oh, actually, okay, now I understand at least what it means, right? So it's the same, I think, of investing, right? Like, or just finances in general, or financial planning, budgeting, right? All these things where, buying your first stock, right? Like, if you're not exposed, if you don't know what to do, it's like gibberish, right? And yeah, and the problem is, if it looks like gibberish, what do? You just follow the people that you think know what they're doing, right?
Yeah.
So, I think that's why. So my thought process, at least my own, thoughts in investing, is that you have to understand what you're doing yourself, right? I know there's like experts out there, people tell you their opinions, whatever, right? But if you don't understand what you're doing, you're playing a very dangerous game, right? So yeah, so I think that's why kudos to you, and just building a community of like knowledge sharing, just because even I am literally, I probably check the site like almost on a daily basis, just because like I want to see like what other people are talking about and what's happening now in, the investment community. And I really appreciate like what you've built here.
Thanks. I feel like we're working towards creating more content and sharing more ideas of successful entrepreneurs, investors to help further their education. That's the goal.
Yeah, and I think this is really interesting, right? Because I mean, at least I grew up in the Philippines, and my parents have mixed heritage, but we also have some, most of them actually come from China. And at least being smart with finances is always something that we discuss somewhat in many different occasions, right? And at least when I was growing up, I always talked to my grandmother, who's part Chinese, and she gave me this red envelope, right? Every time it's my birthday or Chinese New Year or whatnot, right? So money was in front of at least in some conversation very early on, but no one told me like what to do with that money. It was given to you in a red envelope, right? It's like,
Yeah.
oh, I'm gonna buy some toys, right? Or buy like, I don't know, during the time, Nintendo or Sega or something like that, right? Like, oh yeah, I'm gonna save this money and do that. But I think for at least in my family, right, in the culture I grew up in, for cultures that at least think about business and money, how to manage it and how to make decisions for yourself on it is not as discussed, right? So I really that's why it's an interesting that I think that's why we have to educate each other, right? That also takes into account the different cultural elements that may or may not exist in our different unique cultures, right?
Topic of money, it's a very sensitive topic.
Yeah. I mean, it's funny because I was talking to my wife, and my wife's family are all bankers, so they're very comfortable with like these things. But my mom taught me a very like the first thing about money is to not to lose the money, right? Like save everything to the penny, right? So I grew up like extremely, extremely frugal, right? Like literally, I didn't risk my money, but I didn't lose my money, right? And then when I went to Stanford Business School, I realized actually this is a thing called the value of time, right? That actually, if you have idle money, even if it doesn't move, actually degrades in value because of inflation. And another thing is also the value of your time, right? Because you can't get it back. So a question for me is like, you know what? If I can like do things by myself, but it's for free because I did it by myself, right? That's like the best deal ever, right? But let's say if you use leverage, let's say you pay someone, right, to do work for you, but then that would generate more cash for you. Why don't you do that, right? But my mind, at least I was trained when I was growing up, is like, don't pay anyone if you can do it yourself, right? And free is the better option, right? And cheap is the best option. uh Food, for example, right? Like you can do the dollar menu every day, man, and save a lot of money, right?
Good, yeah.
But is that the best thing long term for your health, right? Right? But if you just put yourself into that, right, like it's not value, right? So that's why I shifted my mindset when I got exposed when I was in business school from absolute cost to absolute value, right? Like what is the value is now how I think about money and at least time, right?
Yeah, you should use money in order to leverage time and leverage other people's skills and resources.
Yeah, right. And you can't be the expert in anything, right? Like that's something that people don't get, right? Like, yeah, I mean, you can figure it out yourself, but someone who has, worked on a certain problem, a certain trade, right, for more years than you, right, might be the better suited to actually solve it, right? So, yeah, again, leverage time, people's expertise, so that it has better returns for you, so you have more time to do the things that you want to do. I mean, at the end of the day, my my thought process is that what's the point in doing this, right? What's the point in saving? What's the point in investing, right? What's the point in doing that? And I think that should be like the main filter for your thought process, right? Like, are you investing because of retirement, right? Investing because you want the vacation? Are you investing because of your kids' college education that you wish you had, right? And that should drive more of like the conversation than like what's the specific number in your mind, right? Or just getting rich. Because what's the point, right? Like, you know, and that's why I started somewhat of this conversation where part really of, my thought process is that I save some money, right? Working in some of these institutions in order for me to give myself enough runway so that even if I didn't raise venture capital, I can pursue building a company. Since I've been talking about it since I was young, right? So I saved that for that. So that was a reason, right? Some people's reason is to do other things, right? Like, college and other things, right? So, but some people said, I'm going to save just because I need to retire. But then I'm going to challenge people is that, what do you want to do when you retire, right? And when is the right time to do and act on that and save for that is 65, right? I want to challenge people on that, right? Just because if you can save up for something that you can do in the next 5 years, why don't you do that, right? Retirement, I think, is taking something so abstract, but you have to ask that second question: is that once you retire, what do you want to do? Stay in the beach and hang out in the ocean, right? And hang out in a nice beach in a in an island, right? Like, why do it when you're 65 or 70, right? So anyway, that's like my thought process on long-term investing is like, that's why it's super personal to each one, right? But you have to ask that secondary question is like, if you had the money, that the number that you set out for yourself, what would you do with that anyway, right? And in reality, right, like not just saying I want to buy a mansion, whatever, right? Like what will you actually do for you to be happy, right? And I think that's, at least hopefully someone would think about that, right?
Yeah, I agree. It comes down to your own personal goals, like what you want to achieve in life.
Yep.
Yeah, and then your background, your family values dictate a lot of it, right? So that's why it's not never the same. So when someone says, "Oh, I'm saving up because I wanna like buy a yacht and buy like a huge mansion," you have to think for yourself: is that what you really want, right, or not, right? And why are you trying to chase that specific dream when it's not yours anyway, right? So for example, one of my big dreams is for my kids not to think about college debt, right? Because I had college debt in undergrad and I was stressed, right? And I told myself, since I was actually 21, funny, I didn't have kids yet, but I saved the college fund. That's how crazy I was, right?
Wow. That's really
Right?
impressive. Yeah.
I said that for my future kid, which I don't know who it is, I didn't know who my wife will be, right? I want to save up for college because I don't want my kid to think about, I mean, maybe they'll have some debt, but at least to not think about where they should go to college because of not affording it, right?
Yeah.
So literally my entire savings goals is about that. Some people are challenging me. It's like, college is obsolete in the future. Why did you save so much money for college, right? But that's what I value, right? Because I felt that, I felt the pressure of my parents, like, telling me how tuition for private schools are expensive, right? And coming out of undergrad with debt right away is very stressful.
Yeah, I understand. Uh, it's tough.
Yeah, so that's why. So that's why I think I'm super interested to hear kind of what the feedback is of the community. But yeah, I mean, just a question of like, what are you saving for, right? What are you investing for? Maybe not saving, right? What are you investing for? You know, and I think that's probably a deeper question that I think everybody has to answer.
Is there anything else you would like to share?
Yeah, I think as I mentioned in the beginning, you know, what is that big big question, like, what do you want to, when you're like 65, 70, 80, you know, what a type of life you want to live. And, you know, money and investing is just a tool for you to go through life to achieve those goals that you want for your own bio, right? So, my one of my good bosses when I was in Cisco, asked me before I left, said, Earl, my challenge to you is you should write your bio, right? Like your bio, when you're 60 years old, when you retire, right? And look back and say, are you proud of that life, right? So, so I think that's really the challenge I want to give kind of everyone is, money, investing, all of these are personal things, but the true measure is that you're proud of the life that you're building right now, and you're the only one that will judge that, no one else, right? So yeah, that's kind of maybe my parting thoughts here.
Yeah, thanks for your advice. I feel like a lot of people will want to take some time and reflect on it since given this current situation with COVID.
Of course, yeah, especially now.
Like, where can people find you, or like if they want to learn more about Plentina?
Or
Yeah, of course, yeah. So I mean, if you want to find out about I guess my startup Plentina, so it's plentina.com. My cross-border accelerator cognitilabs.com. But hit me up in Twitter at Earl Valencia. LinkedIn handles also Earl Valencia. So yeah, I mean, ping me anytime. Definitely love to meet the community. Just let me know that yeah, my guy here, Alex, and you're part of the SAI community, and I'd love to chat with you. So
Sounds good. Thanks, Earl. Thanks for your time.
great. Thanks, Alex. Really appreciate it.
We'll look forward to seeing great things from you. I'm sure everyone will be excited to see what you come out with.
Thank you.